Good evening, everybody. Jolly pies for my tardiness, but I was in there grinding in the bathroom. Y'all know I'm renovating my boy's bathroom, and whew, I done had to go back to square zero. You feel me? I had to go back to square zero because man, when I took down the old shower, everything behind the wall wasn't nothing right. And I was trying to make do. And now that I put the backing back up to put the towel on, everything was out of whack. So when I got ready to start putting the towel up there, just dry fitting it, the towel wobbling. And so I had to take the walls all the way back down. And now I got to rebuild everything behind it so that it'll be level. When boy been grinding. Anyway, man, y'all ain't pop up to hear me talk about that. Y'all popped up to hear me talk about Shot Maniac. Is that you? Shot Man? Are you the one who we doing this live specially for? Let me go check and see. I remember that lion because I was like, that's fire. It's got the M4s or the M16s or whatever that is back there with the lion. You know what I'm saying? And the shield. I was like, oh, that's fire. So y'all know how I do, man. I be looking for reasons to get on Al Gore's internet and run my mouth. And if y'all could not see it on the thumbnail, let me pull. I'm sorry, y'all. I'm just getting myself together. You know what I'm saying? For everybody who say, you know what I'm saying, I need to be organized and more professional. Get off my life. Hey, today I put we talking strategy. But if you notice in the title, it says, is a model all you need to trade ICT concepts? Let's think about that for a minute. Why do I say that? Because a lot of times, and I'm not saying this is why Shot Maniac said this, but a lot of time, let's read the comment. What's up, Deborah? Matter of fact, let me say what's up to the people in the chat. Here to learn and share. What's happening? Rhonda Green. What? Speaking of Rhonda Green, Black Spiders. Somebody need to pull up. Rhonda Green pulled up and showed out doing the tape reading. We had tape reading with Rhonda, and she showed out. Somebody need to pull up. To do the tape reading. It's 2024. We taking all challenges to the chin and gonna keep ticking. You hear me? What's up, Lil Hulk? Slim B. This is my first time ever seeing that name. I'm hoping that's Joe Frazier or somebody you got in your thumbnail, and that ain't your grill. If it is, I want to drink your blood. No need TCI, CIT, and TCI plus a model. Why for my trades? I don't know what that means. What's up, Lumpfert? What's going on, Kim? Shots Maniac, I already said what's up. Deborah, what's happening? Spam is calling me. What's up, Ron? My boy Ron, my brother Ron in the building. What's up, Derek? If nobody does this month, I would do it again. No, somebody else need to pull up. Rhonda, you can do it. You can do it if you want to, but somebody else need to pull up. Somebody, Lil Hawk, Deborah, here learn and share. Somebody pull up. Okay. I ain't saying this why. Oh, let's read the comment. Shot Maniac said, I'm having problems finding a trading strategy that I can stick to. Can you help me, please? Now, a lot of times when people say, Tim, I can't define a trading strategy. What they really be asking me is, Tim, can you show me how to get in the trade? So a lot of people, when they say they look for a trading strategy, they just looking for entry models, right? They just look for entry models. And so that's why I put the title as, is a model all you need to trade ICT concepts? And the skinny of it is no. I am going to step out there on a limb and say the model is about that close to being the least important thing that you need in your strategy when it comes to trading ICT concepts, right? What is a strategy? Let me go back. I did a video on this a while back, and I ain't gonna hold you. I don't even know the name of the video. Let me see. I want to trade slides, ICT concepts, the mental game of trading. Is it I want to trade? Rejection? Nope, it's not in there. Oh, strategy. Strategy. Yes, it is. It's in here. Okay. So I did a whole video on strategies. Shot Maniac. I did a whole video on strategies. So if you want to go why is this? I must did a lot of talking, and these slides ain't got nothing in it. These slides ain't got nothing in it. I must did a lot of talking in that video. I got a slide in here that defines strategy. Y'all hold on for a second. Y'all can tell I ain't even, this ain't no put together. This ain't no real class. What's the name of the videos we did when I was talking about trading strategies? Discipline over dollars, maybe. That it might be discipline over dollars. How I start. Was it discipline over dollars? Oh, wait a minute. Let's talk futures part. Man, I done did so many things. Spy strategy, swings and things. Let's see if it's in spy strategies. Yes, it's in spy strategies. Okay. There you go. Y'all don't judge me. What is a strategy? Right? A strategy is, make sure y'all can see that. A strategy is a systematic approach to buying and selling positions. Right? It don't matter what, it don't matter if you trade futures, if you buying shares, if you trading options, it don't matter. A strategy is a systematic approach, right? The strategy is based on predefined rules and criteria. Now, you can have a strategy that's strictly technical, meaning you just going based off the price action. You know what I'm saying? Or you can have a strategy that's based on fundamentals, meaning you're going off of, you know what I'm saying, the quantitative and qualitative information about the asset itself. Or you can have a combination of both, which, like how when we trade futures, it's a combination of both, because we trade price action and we trade around, we use news events to let us know when volatility is going to be injected into the market and stuff like that. So we trade a combination of both using the ICT model, right? It's a combination of both. technicals, which is strictly price action, and fundamentals, which is like the news, catalyst, and stuff like that. He got some other stuff that he look into for like Forex, for like commitment of traders. I don't look at all that, right? And you want to keep it really simple, right? You want to keep it really, really simple when it comes to your strategy. So with that being said, I cannot like help you with a strategy, right? I can't help anybody with a strategy. Why? Because the strategy is gonna have a whole lot of stuff that's unique to you only. You know what I'm saying? It's gonna be unique to you only. You're gonna have to decide what type of stuff you're gonna trade. Are you gonna trade price action like me with the ICT concepts? Right now, I can help you with learning the concepts. I can help you with learning the ICT concepts, right? And what we're gonna do tonight, I'm gonna talk about like what you need to know with the ICT concepts, and then share with you an entry model, right? But before you can use that entry model, you have to learn the concepts. You have to develop your own strategy, and that entry model is going to be a part of your strategy, right? But you got to decide, are you going to trade ICT concepts like moi? Are you going to trade technical analysis like levels, moving averages, candlesticks, trend lines? Are you going to trade fundamentals where you're just going to do the quantitative and the qualitative information based off the companies, stuff like that? That's all part of your strategy, the type of trader you want to be. Are you going to be a day trader? Are you going to be a swing trader? You know what I'm saying? You're going to swing options. You're going to swing shares. You're going to day trade futures. You're going to day trade options. All of this is a part of your strategy, right? Right? All of this is a part of your strategy. This right here was a part of my SPY strategy that I was using when I was primarily swing trading the SPY. You see what I'm saying? All of this, see all this information right here had an entry, you know what I'm saying, for OPEX pullback. I had an entry for strong pullbacks. I had an entry for corrections. I had targets for when I enter in any trade. I had a risk tolerance based off of once I got in. You'd be like, hey, Tim, that risk tolerance high. I know, because these are swing trades and I have to allow for a bigger stop loss. For swing trades, you got to allow for bigger stop loss. So I have to allow for a 20% stop loss because I'm looking to shave at 75%, and I'm looking to save at 100% and leave, you know what I'm saying, some of it on for a runner, stuff like that. It's like all of that is risk tolerance. All of that is a part of your strategy. Don't worry about none of that. That stuff when I was shouting out people, I don't shout people out no more unless you worthy, right? So that's what, in a quick nutshell, that's what a strategy is. A strategy is a systematic approach to doing what you do. Now that I done said that, and now that I done told you, hey, I can't help you with no strategy. Now, let's get to what I can help you with. I can help you with learning ICT concepts, right? Now, let me put you on a path to learning, and then we're going to get into what I'm going to talk about tonight. I'm going to do something good tonight. Don't worry about it. But I want to put you on your path to learning. On your path, 21. Could you do something for me? What them boys doing up there? Them big old hats on. Okay. Let's go to my channel. View your channel. The game tonight? Is the game tonight? I just saw somebody on the field. Okay, so on my channel, if you want to learn ICT concepts, the first thing I say do, right, is go to Michael's channel. Michael Huddleston, aka everybody call him ICT, but his name is Michael Huddleston, and his concepts. Hey, the game is the game tonight. I see live. What that? Is the game tonight? Is the game tonight? The championship. I don't know. They snowed Florida State, so I ain't even been keeping up with it. The Inner Circle Trader, right? If you want to learn his concepts, come to his playlist and watch all of the core content playlist. Right, where it looked different on my computer. It looked crazy different. Playlist. Let me go to home. Okay, multiple playlists right here. See right here. Okay, you see it says 2016 ICT Private Mentorship Core Content Month 1 through 12. That's what you want to watch if you want to learn it from the horse's mouth. A lot of people can't stomach watching Michael, right? They say he long and drawn out, you know what I'm saying? But it's month 1 through 12, right? You got this go up to 10 there, but if you look at all of them, see it go all the way to month 12. See, month 12. And it starts say 2017 out the while because it's a 12-month thing. And I think he started in like September 2016 or I don't know, one of the months. And he ended up in 2017, month 12. So look at those. And it that's where you want to learn his concepts from the horse's mouth. If you can't stomach him, if you come to my channel, right? I got 3 playlists. The first one, it says ICT concepts, part 1, the lingo, right? Part 1, the lingo. This is when I go through and I talk about each one of the PD arrays that he talk about in the core content. Now, I will say, when you get to liquidity voids, I even said it in the video. I didn't agree with what he was saying in the content, and he later came out and said the reason why he was saying that in his content is because that's what people was calling it. He got tired of arguing, and so that's what he called the liquidity voids. But the liquidity void is when there's no trading at all. No trading at all. That's a liquidity void. A full gap. That's a liquidity void. A full gap. Then I got price action. It's the same PD arrays, but it's how to go find them in price action, right? And then I got strategy, and that's when we go through and talk about how to build a strategy, tape reading, defining the range, and how to use the PD array matrix or the PIM-dash chart. Now, that's your 2 ways of learning the concepts, right? Learn the concepts. I personally, I want to know every single thing in the concepts so that I can trade at will. Why do I want to trade at will? Because the first, what's up, Tasha? The game is tonight. For everybody who want to go watch the game, go watch the game. They snowed Florida State, kicked them out the playoffs. All the players opted out of playing in the bowl game. They went and played the bowl game against Georgia with their 15th string players, and Georgia ran them from here to Nantucket. Beat them 137-2. Tasha, tell Snoopy I said, all right. So when it comes to ICT concepts, right? I only trade ICT concepts. So my whole entire strategy is built around trading ICT concepts, right? The championship, Michigan and Washington, the college football championship. I only trade ICT concepts. I day trade futures. I used to use them for swing trading options on the SPY. They can be used for swing trading options. They can be used for day trading options. The concepts can be used. I got friends that use the concepts for trading options on individual companies. I've traded options on the SPY and QQQ. I know they work for that. I got friends that said it works for day trading and swing trading options for individual companies. You can use them for just buying and holding. I buy and hold for my kids. You can use the strategies for just buying and holding. I mean, the concepts for just buying and holding. Now, when it comes to the ICT concepts, right? The most important thing that you have to know. Let's get our notey notes for the note takers. Our notey notes for the note takers. Ooh, let's hide all of this. What is that? I don't know what level that is. I don't know what level that is, but it's not. Oh, that's the opening range gap. Don't need that. Okay. I can squanch this up for a minute. The most important thing you want to know. What's up, E-Rock? What's going on? Even better me. Let's see if the gang know. When it comes to trading ICT concepts, what is the one thing you have to know? You have to know, you have to understand, you have to have an idea. What's the one thing you have to know? Come on, gang. Don't let me down. Drop it in the chat. What's the one thing you have to know? I'll make these letters big for y'all so y'all can really see it good. The draw. The draw. Look at Rhonda. The draw. Where's the draw? The draw. The draw. High time frame reign supreme. Market narrative, period. Market narrative, that's the order flow, in my opinion. Market narrative, the draw on liquidity, that's telling you the order flow is going to tell you if it's bullish or bearish. And you know, if it's bullish, it's drawing toward buy side. If it's bearish, it's drawn toward sell side. Look at that gang showing off. You want to know where Picasso lives? You hear me? You want to know where Picasso lives, right? Picasso, if y'all don't know who Picasso is a little magnet that we named Picasso because a magnet will draw things to it. So where's the draw? Picasso is the draw, right? You want to know where Picasso lives. Where is the draw? Right? Once you understand where the draw is and you know the concepts, you know how to, hey, Deborah, get off my screen. I appreciate that. I've never seen a name before, and I'm not gonna tear it up. Y'all know I'm gonna try it anyway. Tobitsa Malibo. Tobitsa Malibo. That's what I'm gonna say. I probably tore it up. Market structured. I consider that to be order flow. So if you thinking market structure as far as order flow, you in there with me too, right? Okay, then. I know I tore it up then. Okay, so dig it. Picasso, where's the draw? Once you understand the draw, I mean, once you got the draw and you are, what did I name this? ICT top-down analysis. There you go right now. All right. Once you realize or got a good lock on what the draw is, and you understand the concepts, you understand how to use the PD array matrix. For those who don't know, this is the PD array matrix that Michael, these are imbalances and reference points that price action creates, that the algorithm leaves behind to give itself clues as to how it's going to make its way to Picasso's house, right? So if the draw is buy side, meaning we are in a buy program, meaning that the order flow is bullish, then we are going to be looking for opportunities to buy in a discount. That's where equilibrium is. The range that we're locked into, we're going to be looking for opportunities to buy in a discount using your PD array of choice. If the draw is sell side, meaning the order flow is bearish, meaning we are in a sell program, we're going to be looking for an opportunity to sell in a premium, meaning above equilibrium off of your PD array of choice. If you are really locked in and you know how to utilize the concepts very well, you are very skilled at using the ICT concepts, you can trade what we like to call around here against the grain. Meaning, if the draw is buy side liquidity, we're in a buy program, we know that price does not go straight up. So what does that mean? I'm glad you asked that question. If Picasso lives here, right? And we're going to say this little line right here, boop, is the draw, is the buy side liquidity that we are looking to target as our draw, right? This is the buy side liquidity that we are looking to target as our draw, right? Picasso lives here. We are, price is bullish, but is price going to just go like this? Is price just going to go straight up to the oh, both y'all in, okay, that's what's up. Is price just going to go straight to Picasso house? No, it's not going to go straight to Picasso house. So if we're bullish, right, price is going to do this. That's what price is going to do if price is bullish, right? If price is bullish, price is, Tim, why did you come down first? Because you know what it did? Price ran sell stops first, came down, ran sell stops, came up, let us know in this piece of price action right here. Okay, now let's go. We just want to break it all the way down. We want to break it all the way down, right? We want to talk about everything. Sell side liquidity for the note takers. We want to break it all the way down. Tim, you've been throwing out words. How to identify a buy program. Right? How to identify a buy program. Okay? Because I've been throwing out words. What did we say buy program meant? We said buy program meant that order flow is bullish. Right? Order flow is bullish. We're in a buy. When we're in a buy program, the order flow is bullish, meaning we're going to attack buy side liquidity. Okay. And to be exact, we're looking to, right? Looking to attack external buy side liquidity, right? In the dealing range. Okay, so we're going to take this and we're going to delete you. Now, what we're going to do, we're going to come here. Okay. Okay, so how to identify how to identify a buy program, right? The way you identify a buy program, and we said Picasso live up here, right? Oh, that's a Ray. That's our buy side liquidity up there. Picasso house. Okay. One, right? Price respects RESPECT respects premium PD arrays and discount PD arrays. I'm sorry. Discount PD arrays. Discount PD arrays and this respects premium PD arrays. Okay. Price respects discount PD arrays and disrespects premium PD arrays. Just as simple as that. So, right, and right here in the reverse for sale programs. Okay. Sale programs. Two. Base. Cut. Base. Cut. Paste. Okay, so coming from here, from this high, right? Price came up, made a high. Right, let me turn on fancy dances so you can follow the bouncing ball. Price came up, made a high right here. Okay, then price came down all the way down here and made a low right there. This section of price action right here, where's my freaking arrow? This section of price action right here sell program. Price, we were in a sell program right there. Order flow was bearish. Right? Order flow was bearish. Tim, what makes order flow bearish? Because we're just gonna say we have we got bearish fair value gap right there. We have a bearish order block right there. I'm just making this up as I go along. Got a bearish order block there. Bearish order block there. Bearish fair value gap there. All right, bearish order block there. Bearish fair value gap there. We got a low right here. Swing low right there. We got a swing low right here. All right, swing low right there. Now, anything, don't misconstrue a premium PD array with a premium in the dealing range. All right, so as we go from the high to the low of this dealing range right here, okay, this black line right there is equilibrium. That's equilibrium right there, this black line. This is the highest point of the dealing range. This is the lowest point of the dealing range. Okay? Everything below this low is external sell side liquidity. Everything below that low is external sell side liquidity. Everything above this high is external buy side liquidity. Right? Everything in between that high and that low for this entire dealing range, right? Remember, for this entire, from this highest high to this lowest low, everything inside this dealing range is internal liquidity. Right? Everything in, but like fair value gaps, order blocks, swing highs, swing lows. You know what I'm saying? All of the everything inside here between this high and this low is internal liquidity. right? Because that's the entire dealing range in this sell program right here, right? From the highest high to the lowest low of this entire sell program, we got it. I ain't gonna beat that horse no more. Now, when you fully understand the concepts, you can break down the entire range and trade fractals of it, right? Because, like I said, everything in between here is internal liquidity. But if we look at a fractal, this last fractal of this sell program that we're in, this last fractal from this low to this high, because price has stopped right there. So that's the high right now. We haven't made a swing high, but that's the high right there, right? So you can say, okay, I'm going to trade this little fractal of price, because this entire dealing range of this sell program, this is a huge, let's just say this started in December, and now here we go, and this started at the beginning of December, and here we go in January, and we way down here, right? Over a month. It took a month for this to play out, right? Tim, a lot happened in that month. You're right, because if you look at that little piece of price action, if you look at this little, every swing point inside this, come here. Every swing point inside, y'all get the point. Y'all get what I'm doing, right? Every last one of these, every single last one of these are their own individual dealing range, and every one has external and internal liquidity. That little piece of price action right there has external liquidity above that high, right? It has external liquidity below that low, and it has internal liquidity in between. And the way price moves, right? Price. Did you call me, Junior?
I was just saying, Washington won the toss.
Washington won the toss?
Yeah.
Okay. The way price moves is we come like here, we're in a sell program. So what is the sell program going to do? It's going to attack external liquidity here for this piece of price leg. We come down, attack external liquidity. Once we make a low, it's going to move from external liquidity to internal liquidity, external liquidity to internal liquidity, external liquidity to internal liquidity. That's how the buy program and the sell program works. When it reaches its terminus, it reaches its destination that the algorithm was trying to get to, it will go from external liquidity to external liquidity. And then it starts the other way, to internal to external, to internal to external, to internal to external, from external to external, to internal to external, to internal to external, to internal to that's how price moves, right? That's how price moves. Okay, so the sell program, we take out external liquidity, right? Take out external, get down here, right? Move back to internal, right? Move back to internal. Once we move to internal, we make this high, right? Now the external buy side is there. It's a sell program. It's not going to take out buy side. It's taking out sell side. So what does it do? Move to internal liquidity in this range. Then it came and attacked external liquidity, right? Make another low, right? There's your setup. Here's your internal liquidity in here, right? So now that you understand how price moves, okay, so we're going to come here, put this right there, and we're going to pretend like we're just starting the day off like this right here. We're just starting the day off like this right here, and the external liquidity is down here at this low. Where's my low line? Okay, when you understand the concepts, you can do what we call trading against the grain, right? You say, okay, we're in a sell program, right? So I want to engage sell side liquidity, right? We've already taken out this external and we've stopped here and we're getting ready to trade our day. We can trade a bullish retracement back up to, let's just say, a bearish breaker right here, right? We can trade it back up to a bearish breaker. Right? Even though price is bearish, we can trade back to a bearish breaker because we know price is in a sell program. We've taken out external liquidity right here. We've taken out external liquidity right there. So now price is going to move back to internal liquidity. I don't know why I got buy side right there. Y'all got me sitting up here with buy side on there. Right? Y'all got me sitting there with buy side there. Internal liquidity, right? It's going to move back to internal liquidity. We got a breaker right there. We can have a bearish fair value gap right here. We can just say, hey, this is a bearish fair value gap, a bearish imbalance I'm going to trade back to. I like to trade imbalances, right? There's a bearish fair value gap right there that I'm going to trade back up to. I'm going to buy and trade back up to this. Once we get there, I'm going to close my position, and then I may take a short back where? Back to the external liquidity down here, right? Take a short back to external. Now, that's when you understand the concepts. So now that you understand the concepts and you know that you can trade both ways, let's get into how you go about formulating your attack, right? So I said when we're in a sell program, we go from external sell side to internal liquidity, external sell side to internal liquidity, external sell side to internal liquidity. When now price has reached its destination, we're going to say this sell side down here at this 49.8825 that we got marked out, that's the algo's destination. Price goes down there, hit that sell side, comes back and takes out the external buy side right there, right? What do we call that when we take out the sell side, or when we take out the external liquidity and come back up and take out the external liquidity on the opposite end of the dealing range? What do we call that? Right? Let me get all this junk out the way. Am I confusing anybody? Am I confusing anybody? Just hold your horses. We teaching right now. We gonna talk about the chart. See, everybody want to see the charts. Everybody want to see the charts. If you don't understand the concepts, seeing the charts ain't gonna do you no good. Look at Lumpford pulling up with the hard hitting answer. Look at Lumpford pulling up with the hard hitting answer first. Correct. We call that a break in market structure shift, whatever you want to call it, right? And in this case, it would be a bullish break in market structure because we in a sell program. We were in a sell program and we came up and we took out external buy side. right? So now we got a bullish breaking market structure because this is the internal liquidity inside that piece of price leg right here. Internal liquidity, we shot through all of that and we took out the external. We got a shift in market structure, a market structure shift, breaking market structure, whatever you want to call it, right? Now that we got a breaking market structure, now you know the sale program has stopped. It's failed now. We have switched because we got a break in market structure. Now we're looking for price to start to respect discounts, disrespect premiums, respect discounts, disrespect premium. Y'all get the picture, right? Y'all get the picture. Okay. Now let's squash this up a little bit. Let's squash this up a little bit so we can get to, there you go, Picasso. We want to see Picasso, right? We want to see Picasso. That's our external liquidity, right? And we just took out external liquidity there on the sale program, okay? On the sale program. So that's our breaking market structure right there. Right, come up, got our breaking market structure right there. Now, price is respecting all of this right here is everything inside here is internal liquidity. In between these two ranges, all this is internal liquidity, right? So now we're coming in and we're here. We're here now, understanding the concepts, right? Now, what we're going to do, we are going to talk about possible entry model, and we're going to lay out some, how I want to put it. We're going to lay out some rules, some prerequisites. We're going to lay out some prerequisites. That's what I'm looking for. We're going to lay out prerequisites before we start looking for our entry model. Okay? And the entry model is going to be entry model. Right? This is going to be our entry model right here. Our entry model is going to be a rate of opposing liquidity, rate of opposing liquidity displacement towards the draw displacement toward the draw and then a retrace back to a fill in the blank PD array. Tim, why did you say fill in the blank PD array? Because everybody is going to see different PD arrays easier. I see imbalances, aka fair value gaps, the easiest. That's the easiest thing I see, right? I can spot breakers and order blocks relatively good. I can spot mitigation blocks relatively good. I can spot swing highs and swing lows easier than I can spot fair value gaps, right? So whatever you can spot the easiest, make that your PD array of choice in this model right here. And we'll try to find examples of different ones before we get out of here. We going very long, right? That's the entry model. Not gonna get into the whole strategy because, like I said, I can't make a strategy for you as far as risk tolerance, time of day you're gonna be trading. I can't. That's all part of your strategy, right? That's your strategy. You can add criteria into your entry model that your raid on liquidity has to be a certain type of liquidity. It has to be time-based liquidity where you're attacking liquidity from a prior session, right? It has to be an hourly liquidity from a prior session. It has to be a 4-hour liquidity from a prior session. It has to be a 5-minute liquidity from a prior session. It has to be a 5-minute liquidity from the same session. It's all up to whatever your strategy calls for. I can't define that for you, but this is our entry model right here, right? So now that we got our entry model, that's our entry model. Now, let's give some prerequisites for the entry model, right? Do I space that? Requa. I tore that all up. Okay, so we are going to, before we start looking for our model, right? We want a RAID of daily liquidity, a RAID of daily liquidity, right? And remember the entry model, right? Remember the entry model. So these are prerequisites. So a rate of daily liquidity Jesus Christ, yeah. What's wrong with that? Why was it underlining it? Okay, rate of daily liquidity before we do anything. So we need a rate of daily liquidity. We want, instead of going with a market structure break, we want to see price create an inversion fair value gap Ivy. We want to see it create an inversion fair value gap. I'm doing this inversion one because this is something that I just did, something I just used today. We want to see price create an inversion fair value gap on at least the 4-hour time frame. Right? So rate of daily liquidity and then create a fair inversion fair value gap on at least a 4-hour time frame. Okay, so that's our prerequisites, that's our entry model, and that's our prerequisites. Right now that we did all the learning, now let's go over here to the chart. Uh-oh. Boom. I'm about to make this a whole lot smaller. Where did Picasso go? Oh, there you go. Okay, so here we go. Now, let's put this into replay. Wipe out today's candle. All right, wipe out today's candle. 16 candle. Do. So, prerequisite: rate daily liquidity. Sell side. All right. Y'all remember when we was doing our thing on this retracement back, we was looking for a reason to buy and attack a high right there. We had a high right up here, right there. Right. We had a high right there that we had got really close to. Right. We had a high right there we had got really close to. And then we said we would like to see price pull back into this weekly fair value gap. Right. We said we want to see price pull back into this weekly fair value gap. Right, to give us an opportunity to buy, to attack that buy side up there. Right now, remember, if price don't have to get to Picasso's house to make money, you utilize the PD arrays to let you know, hey, do I still want to stick with this? Do I don't want to stick with this? Right. So we want to attack prerequisite. I'll make this a little bit bigger so y'all make sure y'all see it. Raid daily liquidity. Check. Right? We raided daily liquidity. We came down and we took out the sell side right there. Right? We did that on Friday. Took it out. Okay. Now, create an inversion fair value gap on at least the 4-hour. Right? So we come to the 4-hour. We come to the 4 hour because we want to create an inversion fair value gap on at least the 4 hour. This is a prerequisite. We're not even looking to get into a trade yet because one of our prerequisites have been met. Set off an alert in our head. Hey, we met one of my prerequisites. Now we're looking for an inversion fair value gap on at least the 4 hour. Here we go. Now, we have an inversion fair value gap on the 4 hour. We're going to make it gray. We're going to change it here. Right? So, got an inversion fair value gap on the 4 hour right there. It has been made. Right? The inversion fair value gap on the 4 hour has been made. Okay. That buy side right there would give us a breaking market structure on the 4 hour. If a prerequisite was a breaking market structure for us, like I do a lot of times, most of the time I'm looking for a breaking market structure. For those who still, want to know that in this example we're given, a break of that high right there would be a breaking market structure, right? What makes that a breaking market structure, Tim? We have a swing high right here that came down and took out external sell side. And then if we come back up and take out that swing high, right? We're in a sell program here. Come up and take out that swing high. Now we have gone from external liquidity to external liquidity and creating a bullish breaking market structure. Now, but that wasn't a prerequisite on our list. That was just that was if you was doing it that way, just a bonus. Okay, boom. So now at this point, where whatever kill zone, you only want to trade ICT concepts during kill zones. So if you trade the London, you would start looking for your setup on whatever time frame you specify as far as your rate on liquidity. If you do the hourly rate of opposing liquidity. If you do the 15-minute, a 15-minute rate of opposing liquidity. Now you start looking for your entry model because the prerequisites are done. Okay, so now let's map out. See, let's come here. Lump, Troy just sent a text. Oh, you ain't in this one. You ain't in this one. It was just to me. It was just to me. He said something about what's the name? He said somebody on the news or something. Okay, some people that I know. All right, let's go. Let me go to the hourly chart. Go to the hourly chart, and we're gonna look at the London kill zone first. Right? We're gonna look at the London kill zone first and put this on 15 minutes. I can put it at 130. We're gonna look at the London kill zone first, and then we're gonna look at the New York kill zone. So 1:30 to 5 o'clock. 5 a.m. 1:30 a.m. to 5 a.m. Okay, let's move this forward. Okay. So now we're coming into the London. We're going to go with hourly liquidity. Just to make it simple. I don't know how this is going to play out right now, but we're just going with hourly liquidity as the attack. That's an hourly swing low right there from the prior afternoon. That's an hourly swing high from the Asian session. Right. So this is from the prior day. This is a prior day afternoon low. This is a prior session high. Right. Midnight is right there at the top of this inversion fair value gap. That's midnight right there. That's an important level. You know what I'm saying? So just marking out some stuff. Just marking out some stuff to look at. Okay, so all right, let's see what price gives us. Right, let's see what price gives us. I'm just gonna click forward. I'm gonna click forward. Okay, boom. We got our attack. We got our attack on opposing liquidity. Right? Attack on opposing liquidity. Now we want to see displacement toward our draw. Right? So we got the inversion fair value gap. We came down, took out sell side. We got the inversion fair value gap denoting, you know what I'm saying, bullishness, right? Denoting bullishness. So now we're looking for an opportunity to go towards some buy side, right? Towards some buy side. And on this hourly, right, we got an hourly breaking market structure right there showing some bullishness, right? So we're not anticipating this low being come back to, because on the hourly, we've already got an hourly breaking market structure. This would give us a 4-hour breaking market structure, right? So understanding each level coming down. Okay. Step forward. All right. There we go. We're starting to move up. Starting to move up. Oh, got us a nice little move there. Right. Got us a fair value gap. Took out that high right there. Right. So we got displacement here. There go our displacement. The displacements toward the draw. We took out opposing, got displacement toward the draw. Now we need a retracement back to fill in the blank. Now let's see what happens. All right. These are hourly candles that we're using. So we done went all the way through the London. Right. So I'm just gonna take the London out. I meant to drop down to a lower time frame, but we still in the hourly. So let's go down to 15-minute so that we can you know what I'm saying, realistic. Now we was using the hourly, yada yada yada, boom. Okay, so we got our displacement. Now we look for a retracement back to a PDub rate, because we're not, but most people ain't gonna enter on the 15-minute. So we're gonna go to a 5-minute, right? That's a good entry time frame for most people, right? That's a good time frame for most people. And we have gone slapped through the New York. So what we're gonna do, we're gonna come back. We're gonna come back to 930. We're gonna come back to 930. Well, that's gonna change what we did. Okay, boom. That's what we're gonna go right there at 10. We're gonna go there because that's our displacement right there. So now we're gonna go to the 5-minute. Right, we got our displacement. Now we're going to the 5 minute. Now we're looking for a retracement back to X PD array. Right? If I lost anybody, I just backed up because we was looking at hourly candles before and trying to enter off hourly candles, it might span over days. So I'm getting it to a lower time frame where we can actually fulfill the obligations. We attack opposing liquidity. One, we got displacement right there. We got the pang out with the fair value gap. That's the displacement. You know what I'm saying? We broke structure there. We broke structure there, right? On with that displacement, fair value gap right there. Okay, now we're looking for a retracement back to a PD array. We're on the 5 minute. We are inside from the New York Open, the kill zone. The kill zone actually started there, and now boom. That's our kill zone right there. Okay, now, and as you see on this lower time frame, this has played out multiple times for us already, right? On this lower time frame, this has played out multiple times for us already. Okay. And we're only going to look inside the kill zone over here, right? Well, you can look inside this one right here. You can look inside this kill. This is the London kill zone. So inside the London kill zone, right there, we didn't get what we want on the lower time frame, but you know, if you ambitious, you got displacement right there, retrace back down to that right there. That's that's you know what I'm saying? That's the model, right? Because we got attack of opposing liquidity, displacement, retrace back to a fair value gap right there. Attack of opposing liquidity, retrace back to an order block right there. Right, there's two different examples for you right there. Attack and opposing liquidity, displacement, retrace back to the fair value gap. Let's mark it out for those who can't see. Right there. Attack and opposing liquidity, displacement, retrace back to the order block. Two different entries right there during the London kill zone. Okay, we're looking at New York after the whole time when we got our displacement on the hourly. We're above our fair value gap right there. We've had at the open, right here at the open, the liquidity was taken back here during the London, right? And we was expanding up. Then we came over here and we didn't get an attack on what? Let's see before I say we didn't. All right, so we came down and we kissed an hourly low. We didn't sweep it, so that's not our requirement. We kissed the hourly low. We didn't go below it, and we got displacement and retraced back into a fair value gap right there. But we didn't go below, so that's not our model. We came down and tested liquidity. We didn't attack. We didn't dip into it. We didn't attack it. That's an hourly that's an hourly low right there that I highlighted. Right there, that's an hourly low. We didn't attack it. That's not our model, right? I'm trying to see if anything happened inside the kill zone. So right there, we dip below these lows right here inside the kill zone. Go up to a 60-minute. Nope. Nothing over here. Nope. Nothing over there. That's the 60-minute low. That's the 60-minute low right there. Okay, so that's the 60-minute low right there. And New York still ain't gave us nothing. We need a 60-minute low that we're and it never gave it to us because we said we was gonna the 60-minute low was the low that we was looking for to raid. So with this run up all day long on the New York, our entry model that we were looking for never played out. It played out in the London, right? We took out a 60-minute low, right? We took out a 60-minute low. We had already formed the prerequisites was made. We took out a 60-minute low. We had displacement toward the draw, and we had retracement back to a fair value gap. We had retracement back to an inversion fair value gap during the London kill zone. During the New York kill zone, for this entry model, we never got an opportunity to trade, and we sat there and just watched price go to the moon all day long without me, without us. And with that, I yield my time. You still in here? Shot maniac, you still in here? Did this help you at all, or did I just waste a whole bunch of time? Question: if we should only trade ICT concepts during kill zones, how does that work for swing trades? Kill zones is for intraday trading. Kill zones is for intraday trading. Kill zone, if you're swing trading, you're not trying to enter based off of what price is doing during this kill zone. You're entering based off of what price did over these days. Now, you can use the kill zones to plot a better risk to reward entry. You know what I'm saying? If you want to, it's going to be like if you're swing trading options, you're going to be buying and selling during the New York kill zones. You're going to be buying and selling either during the morning or the afternoon kill zones for the New York. So if you got time to drill down into on the day, like the day of, you got time to get in front of the charts and drill down to the low time frames and be like, okay, this is where I'm gonna make my entry. Then you can do that. But if you ain't got time to do that, you're entering based off of what was done over like days. For example, I guess what's the name gone. I guess he tapped out. The one we doing it for done tapped out. The one we doing it for done tapped out. Okay. All right. This is my as y'all can see, I was up trading during the London. See, I got my sell side marked out. We came down, took out that sell side. And I was trading here. And then I had this stuff up here marked out. Why did I got this marked out? Because how high above the high can we go? Right? We got a daily fair value gap and a 4-hour fair value gap above price before we get back to the weekly high. Right? Those the imbalances at primarily the daily fair value gap. That's the one that I was watching. We got a daily fair value gap up here. Right? That's the primary one that that I'm watching. Right? That's the primary one that I'm watching. as far as how high above we can go. Why? Because that's the highest time frame that we got above us right now that I was looking at inside this dealing range, this weekly dealing range right here. We got a daily fair value gap up there, and then we drop down lower. There's a 4 hour, there's hourly. This is hourly, so it's an hourly there, it's a 4 hour there, it's an hourly up here. You know what I'm saying? But the main one was that daily right there. That I was looking at that daily fair value gap right there. Now, as a swing trader, as a swing trader, last week, let me see, where's last week? Monday. Remember last week, we was talking about, I said I want to come back down to this weekly imbalance before we take out this high. So if we take out that high before coming down to this weekly imbalance, I don't want to look to try to get long off of anything but this monthly fair value gap down here. If we took out that high first, I was like, but I want to come back to this imbalance first to get long, to start drawing toward that. Now, and remember, like I say, you don't have to get to Picasso house to be profitable. Okay, so weekly fair value gap. This is the entire weekly fair value gap right there. Right. This is this week. This is today. Let's do this. That was last week. Okay, so last week, that's the weekly fair value gap right there. Right now, we're gonna go to the daily. Okay, that's the go to the daily. Okay, so we got weekly fair value gap, and we got two daily fair value gaps right inside the weekly. Okay. If price is exceedingly bullish, you want to see it respect either the top 25 or the 50% of your imbalance. Hey, Michelle, off my screen. Right. I'm gonna leave that up there so I can know what I'm talking about. Right. You want to see it respect this stuff right here. Okay. So we said, hey, if we take out this high, I ain't looking to get long until we come down here and do something with this. And then we will be looking for it to, we want to see it. Same thing. Down here, you want to see it respect. You want to see it respect the top 25% to 50%. Right? You want to see it respect that top 25% or that 50% on a closing basis if it's, you know what I'm saying, exceedingly bullish. So looking at this weekly imbalance, right? Looking at this weekly imbalance, right? Starting out, we waiting to see what price gonna do. So that's Tuesday. We start drawing back to it. Hey, we chomping at the bit. Wednesday, we hit it. Hey, we feeling good now. Right? Thursday, still messing around with it. Friday, what did it do? What did it do? it went down to the 50%, rejected it back up on the daily, and it closed the week above that top 25. So it is respecting this top 25%, 50%, but it's respecting the top 25% on a weekly closing basis. This is a weekly PD array, right? And it's respecting the top 25%. And then if you zoom in and look closer on this daily fair value gap, the daily fair value gap is it closed right at the top 25%. So the daily is respecting the 25%, and the weekly is respecting the 25%. So you got confluence on time frames that is respecting. So right there, now for a swing trader like myself, now that I see this do what I want it to do, now I'm not bogging myself down with, are we going to come do this? Are we going to hit this breaker? We going to hit this mitigation block at 12 o'clock, 2:30, and we go. It came back to that fair value gap on a weekly basis. It's respected it. So boom, I'm coming in at New York, right? Let's go down to the hourly time frame. Right now we're on the out. I'm just jumping down here to the hourly because I want to get over to the New York session. Well, matter of fact, let's go to 4 hours so I can pop over there a little bit quicker. 1, 2 times that PM, 2 a.m. Let's go to the hourly now. So that's at 5 right there. Okay. So 7. Okay. Let's go to 15 minutes because we already got into the New York. We're going to back up some because we want to get to 9:30. Okay. So now it's 9. Did we get there? It's 9:15. It's getting ready to market getting ready to open. Right? Market getting ready to open. This right here is our low from Friday. Right? This is our high from Friday. Right? That's the Friday low, the Friday high. We're getting ready to open at 9:30. Right? I already got my order in. If I ain't got time to be watching the market, right? I ain't got time to be watching the market. I already got my order in to buy X calls. Let's go to SPY. Right? I'm just gonna look at the SPY real quick. Go to the SPY and get out of market replay. Okay, so all right, so right here we closed Friday at 467, and then we opened up today at 468.43. So we opened up almost $1 up, right? So we closed at 467.92. So since we closed at 467.92, I'm just going in and I'm buying at the money calls. Boom. I'm buying a 468 call because we closed at 467.92. We opened up at 468.83. I'm getting snowed on the price a little bit because I'm marketing in, but I'm not worried about it because I'm entering and my stop is going to be if we drop below the prior day's low, because we've already did what I needed to do on the weekly and the daily from Friday. So now when we coming in, price has already given me the motion that we're going. So boom, I'm going in at open, market in, because I ain't got time to watch it. But if I do have time to watch it, right? If I do have time to watch it, then we're going to go back. What was that, on the 15th? If I do got time to watch it, I ain't gonna watch it that close. I ain't gonna watch it like uber hard. Yeah, I got time. So I'm watching it. Let's go back to 9:45. Right, we're going to 9:45 because we got time to watch it, and we wait until like around 10 o'clock when the premiums ain't crazy expensive no more. Right. So now we're watching price. We came up, we see, right? We see what we're doing. We see we took out buy side liquidity right there, right? Then we come in and right here on this 10 o'clock candle, you see how we got that pullback right there? Let me go back and do it again. We're going to go down to 5 minutes so you can see it good, right? So here we go, right? We watching it. We came up. We got a pullback. We broke. We got a pullback right here. If you're watching it there, that could have been an entry right here. If you want to use lower time frame entries, right? We retrace back to a breaker over here, right? We had a displacement, retrace back to a breaker. And at that moment right there, you buying your 468 put, your 468 call, or if you want to change your call, but you're buying your 468 call because the call we was looking at getting was the 468. You buying it there. You know what I'm saying? We're at 9:45. Let's get over here. Right there. We had a pullback at 9:50. We pulled back again and rocketed it up. Right. Then at 10 o'clock, we doing our thing, whatever. Pull back right there at 10 o'clock. Boom. Get in on that pullback. I don't know. Get in on that pullback. You know what I'm saying? Get in on this consolidation. Whatever. You know what I'm saying? Anything in this area right here where we retracing back, any kind of pull, because you want to buy when it's coming back down. Because the options. So it's like you're picking your poison, right? This is after 10 o'clock right there. This after the premiums done settled down a little bit. You just buying on a pullback, right? We already had the retracement back to the breaker. We had a retracement back to the fair value gap, right? Well, we had immediate rebalance right there. So, you know what I'm saying? Immediate rebalance, and then we retrace back down to it again. Opportunity to get in, respecting all these down close, not even touching the down close candles. You reading the price. But that's just your way of doing it if you don't have time to watch the market, and if you do have time to watch the market. Hopefully that helps. Price hit up. Okay. I wasn't paying attention to whatever that was. You're welcome. First note thyself. Okay, thank you. So basically ignore kill zones for swing trades and just use the concepts. Just use the concepts. Once price meets your prerequisite, you know what I'm saying? That's your day to go in. You know what I'm saying? Like if you can have however many prerequisites you want for your own thing. Like But with swing trades, you're going to have, remember what I said in the beginning, you're going to have bigger stop losses with swing trades, right? You may not use a percentage. You may use, like I say, if we go back down below this daily low, I'm out. You may use percentages. You may be like, okay, if I get down to 15%, I'm closing the trade. You know what I'm saying? It's like, but with swing trades, you got to allow for bigger stop losses because you're doing it based off of daily and weekly charts. A weekly chart can drop down 70 points and then turn back around and rock it up 150. You know what I'm saying? You got to allow for bigger stop losses on swing trades. Just use the PD arrays. Yes. Hey, man. I appreciate you pulling up with the hard-hitting question, Michelle. Was this helpful to anybody? Please let me know. If you found value in this, if you found value in this, put a 1 in the chat. If you found value in this, and if you found value in this, put 1 in the chat. And if you, I don't know, I lost my train of thought. If you found value in this, put a 1 in the chat. I appreciate that. Rod Well say he taking notes. Oh, before I get out of here, let's see if we got any new 1 year. If we got any orange spiders. Let's see if we got any new orange spiders. We celebrating 1 year all January. We celebrating 1 year all January. Let me move my mic. 1 year. We celebrating 1 year all January. Yeah, hear me. See, memberships. See all the members. Let y'all see my screen. Expand this up. Anybody new? Nope. No new ones. No new ones. We got 11 months. Kim Rodwell, Father Legend, Sonia, Joshua, Philip Bryce, Pamela Thomas, the name I can't never say, Valdez, Max K, and Erica. They are all at 11 months. I don't know if they all came in around the same time, but they all at 11 months. So they on deck. I don't know if they're going to switch over in January or if they're going to switch over in, I don't think they was February. So sometime in January, they probably going to be switching over because it's only January the 8th. It's only January the 8th. And they probably going to be switching over sometime later in the month. But shout out everybody who's been rocking from day one. Shout out Lil Hawk. Lil Hawk is the longest standing member. Lil Hawk, Here to Learn and Share, Rhonda, and Cool It. They all found the link in old videos. I was going to announce it on January the 1st, 2023. On December 28th, I finished setting everything up and I started putting the link in my old videos because you have to manually go do that. With the new videos, you can just put it in the template and it's going to automatically be there. But for the old videos, you have to go back and manually put it in. Some looky-loos by the name of Lil Hawk, Here to Learn and Share, Rhonda Green, and Cool It saw the link in the old videos and went and signed up on the 28th. Oh, and Angela was the first person, but Angela no longer with us, but Angela was the first person. But Lil Hawk was the second person, and Lil Hawk is the longest standing Black Spider member to date. He's been Black Spider from the beginning. He's the longest member to date. Shout out Lil Hope. Shout out Lil Hope. Here to learn and share, Rhonda and Cool It. I ain't seen Cool It in forever, but Here to learn and share and Rhonda, they are the most active members. They are the most. Shout out Rhonda been going in and putting timestamps in the videos that I've been doing. Like the videos I've been doing recently, Rhonda been on her "you ain't gonna take my class president crown" vibes. She been going in and what you say, Sam? Hey Tim, I can't be on as much as I like because of work. I catch replays, but you really out here doing the Lord's work. Salute. Man, I appreciate that, Sam B. It's all good, man. That's why I put it on Al Gore's internet so you can look at it in your own time. And again, shout out Rhonda. She done started going through and putting in time. I ain't gonna say she gonna do it for every video, but like the last few videos I done did, Rhonda been going in and putting timestamps in there with little notes. Hey, check this out. I was so geeked about it. I'm like, man, baby, look what Rhonda did. Rhonda did this. I'm like, she's so dedicated, man. She always shoot, man. She be shooting holes all in my LaJoy. She already taking notes. What all she gotta do is copy and paste. Like what? That's not that hard. Like I was like, but it's, you know what I'm saying? She doing this just on her. I ain't asked to do it. She doing it for the community. Like put this big. She's like, yeah, I know it's big, but all she gotta do is copy and paste. It ain't always shooting holes in. I remember back when I was learning how to play the keyboard. I used to be able to play the keyboard really good. I taught myself how to play the keyboard, watching like YouTube videos and practicing. I bought like a little how to play keyboard course. It was Jermaine Griggs. I can't remember the name of the course, but it was Jermaine Griggs' course. I could play relatively good. I sat down because she used to always sing the song Superstar by Usher. That I'll be your groupie, baby. She always be telling me she my number one fan. I'm your number one. I learned how to play the song. I taught myself how to play the song. And when I'm playing the song and singing to her, and then she gonna tell me, "Oh, I ain't impressed with that. I expect you to be able to do that." You not impressed? You not impressed? Yeah, I expect you to be able to do that. You can do anything. You know how long I sat back here learning how to play this song for you? And what come out your mouth is you not impressed? It was the same thing when I'm all excited about Rhonda doing this, right? And she, all she gotta do is just copy and paste. It ain't that hard. Just if she taking notes, just copy it and paste. Like Tim talking about fair value gaps at 4 minutes. Okay, copy it, paste it in the comment. You copy what you already took a note and paste. I said, forget it, man. Y'all don't understand. Gospel music. Yeah, Gospel Music Training Center. That was the name of it. Gospel Music Training Center. That was it. That's it, man. That's all I got for y'all. Rhonda Green, Michelle Tuck, our class presidents. It helps me review. Yes, we do appreciate you. Michael, if tomorrow's high is broken, should one go? Who is Michael? Who is Michael? My name Tim. If tomorrow's high is broken, should one go through the yes, you go through the same process. You go through the same process every day. Every single day, you go through the same process. Right? Let's go into it. Right? And you go through the same thing every day. So this is today's high, today's low. I'm going to say today, but it's actually yesterday because we've already started today. This is today's candle, but here's today's high, today's low, right? And we're going to put box top day, box bottom day. Oh, there you go. Okay. So that's our high and low, right? Now, go down to the 4-hour, right? So on the 4-hour, right? On the 4-hour, we came down. We were in a sell program, right? External, internal, external, internal, external, internal, external, internal, external, internal, right? Internal, external, right? So we've come and taken our external, right? Had a failure swing and then took out external again several times, right? We've taken out external several times right there, right? And this is on the 4-hour time frame. Right. So we've taken out sales buy side several times, all the way up to there with a strong closure above that, got into this 4-hour fair value gap right there, which was also we closed the day above this daily fair value gap right there. All right. So we closed the day above that daily fair value gap right there. Now, let's go back to 4-hour, right? So now we've come up, we had a whole lot of back and forth there, and then we had heavy displacement right there. Super heavy displacement right there. Now, if the bullishness, if it's exceedingly bullish, right? You don't want to see price go past, well, this is not a fair value gap yet. So we can't mark that out, right? That's not a 4-hour fair value gap yet. But see that high right there where we had came all the way up to, we had went above this little high right here, that swing high right there. We went above that 4-hour swing high. You don't want to see price sliding back down. You know what I'm saying? Sliding back down, just blowing past this breaker right here. Right. That's the that's the body of the breaker right there. Okay. And then this is the entire breaker right here, right? That's your entire breaker right there. So since we don't have a fair value gap right there, we're just going to use that breaker, right? The entire breaker, the mean threshold for the entire breaker is right there, 47.7750, right? You don't want to see on a 4-hour basis, you don't want to see a closure below that on a 4-hour basis. That's going to be showing weakness in the bullishness, right? Now you have a 4-hour imbalance that's down here, so price can come down there to it. You got to allow for that. You know what I'm saying? But you don't want to see a 4-hour closure below that 47.7750 if it's exceedingly bullish, right? Just the body of the breaker, 47.8575. If you don't get a closure below that, that's even better. To respect just the body, well, 47.8525. Respect the mean threshold of the body of the breaker, that's even better because it's a really long wick, right? So because you really want to be looking at all of this down here as a balanced price range. Why do you want to look at that? Because on the 4-hour, we had sell side delivery with a whole bunch of back and forth, right? Took out sell side, right? And got displacement up, offering buy side, right? And then on the way up, if you look here, we have opposing imbalances right there, aka balanced price ranges in the imbalances, and then you got all this back and forth, and you got the buy side delivery. So you want to look at this whole area as a balanced price range, and you don't want to see price slipping back down into that if the bullishness is gonna ensue, because you got a daily closure above a daily fair value gap right here, right? So that's bullish. And then so you want to see just a slight retracement back to the breaker and then continue up, right? Now, what you watching for as far as the motions, right? So we've come up, took out external, right? Come back down, internal. Come up, take out external. Come back down, internal. Come up, take out external. Come back down, internal. You know what I'm saying? You want to see something like that. And to let you know how safe it is to get in on the pullback, you want to look at the displacement leg, right? If like this, like if you get a displacement here, like that big displacement, and then retrace back down in, this is a more comfortable entry for me than a little displacement with a retrace back in. You see what I'm saying? You see how much we like this right here, this displacement above that high is a whole lot bigger than this displacement above that high. This one can very well still work, but this one is less comfortable to me because it's, you know what I'm saying, it's like a weaker displacement that you just want. That's just you start that same process over again. Now, on the 4-hour time frame, you know what I'm saying, you would have to come all the way back down here as of now, you know what I'm saying, to be like bearish, because this move here came up and took out the buy side. So to have a bearish breaking market structure on the 4-hour, right as it is now, you have to come all the way back down here to the daily low. You would have to come all the way down and take out yesterday's low. Now, if we proceed up, like with a 4-hour, and just say take out, right? Let's just say we come down to the internal and then come up and take out that high right there, and then come back down and take, now breaking that low right there would be a bearish breaking market structure, right? If we came back to internal, pushed up, took out that high, right? And then came back down and broke a low after retracing back down here, that would be a bearish breaking market structure. But as it stands right now, for the 4-hour to break bearish, it has to come all the way down and take out yesterday's low before the 4-hour breaks bearish. Tomorrow's Tuesday. Hopefully that helped. First note ourselves, even though my name Tim. Tomorrow's Tuesday. We have international trade goods at 8:30. Might do something, might not, I doubt it. Thursday we got CPI along with the job numbers, and then Friday we got PPI. So Thursday and Friday, Thursday CPI big numbers. Friday that's a big number too. So Thursday and Friday, that's inflationary numbers. That right there is going to be some volatility injected, especially CPI. Other than that, it's going to be a light news week. The day before CPI, sometime the market is blah. Sometime the market is blah a couple of days before CPI. The day was crazy to the upside. Today was crazy to the upside. So, you know, they trying to handle some business before CPI come out, right? They trying to handle some business before CPI come out. Could it be the fact they trying to get to that high before CPI come out, and then we turn around and get like a real pullback? Remember, we was talking about the NQ and the Dow has come to highs at the anticipatory reactionary point, right? Right now we're seeing bullish divergence, but can this bullish divergence be to let the sixth sister, the ES, get to those same highs. And if the ES, the sixth sister, get to those highs and it don't displace past them as much as the NQ and the YM, then that would be bearish divergence because they've come to an anticipatory reactionary point. Could that be what the market is trying to do? Let the sixth sister catch up so that we can get us a nice little 10% pullback. And that would take us down to that monthly fair value gap we was talking about. Just food for thought. Just food for thought. Your brother. Oh, Michael. Yeah, that's oh yeah. Oh, he was talking to my little brother. When he asked that, he was talking to my little brother. I see the ones in the chat. I appreciate y'all for putting the ones in the chat. I see some people I ain't never seen before. Freddie Ray. What's up, Freddie? Valentine. What's up, Valentine? I'm gonna say Valentine. Valentin. What's up, Audrey? I ain't seen you in a minute, Audrey. I appreciate all the ones that everybody dropping there. First Know Thyself. I ain't never seen that name before. Welcome. If it's not your first time pulling up, I truly jolly pies, but I don't know them names, so I want to just say welcome. If it's not your first time pulling up, hey, welcome anyway. And thank you for pulling back up. If it is your first time pulling up, go ahead and subscribe. Come back and hang out with us again. Because guess what? For all of 2024, we are leaving doubt, fear, undisciplined, no game plan. We leaving that in 2023, and we taking a leap, baby, to financial freedom. All January, we celebrating 1 year of the gang. I appreciate y'all. Look here, man. You could have been anywhere else, but you chose to hang out here with me for 2 hours and 2 minutes. Take advantage of the day while you can, man. Let your loved ones know that you love them. Don't just say it. Don't just show it. Say it, show it, and confirm it. Because we never know when our time going to come. Everybody got a date. Everybody got a date. We don't know when that date is. Take advantage of the date. Don't be like little Timmy Rogers and put off till tomorrow to go see your daddy, and then all of a sudden you can't go see your daddy no more because he's gone. Don't be like me. Take advantage of today while you still can. Ain't nobody promised tomorrow. Go in the other room right now. Hug your spouse. Hug your kids. Hug the dog. Hug the cat. Hug the gerbil. Hug the turtle. Hug the cat. Whatever you got, hug them, man. Take advantage. Till the next time I decide to jump on Al Gore's internet and share my thoughts when it comes to these ICT concepts, y'all be safe out here in these trading streets, man. It's your boy, Aranya Grande. And for those who don't hablo Espanol, that means big spider. I'm gone, man.